of all, I want to welcome everybody here. Let me give you one good tip. I'm always full of tips. If you are in business and you go to a networking party, network. Don't sit there at the table looking at your phone, talking among yourself. Meet somebody new. Let everybody know what you're doing, okay? I'm a real estate investor, okay? If you see anyone who has any houses for sale, distressed properties, as I was telling my fellow real estate lady, I'm looking for steals, not deals. Everywhere I go, people know what I do, okay? Because I need you to know what I do so you can send me houses, you can send me tenants, and so forth. So always get up and network, have your networking information together. What do you do? What do you do? Do you have an elevator speech?
I do.
Come in, hurry up. Hurry. You know, hurry. You have a lot to do. Give us your elevator speech. Speak clearly into the mic.
Hello, my name is Isaiah, and my corporation is called Sparks of Hope, and it's an acronym. It's called, it stands for Supporting Parents and Resilient Kids Succeed, and we are dedicated to providing resilience among homeless youth and their families. And our vision is to hopefully have an indoor plaza, hub where families can find resources, support, and the strength to thrive for the rest of their life.
Thank you. Everybody, get your elevator speech together. We're going to take a moment of silence just to reflect on what we're doing, get our mindset together, and try to get ready to get a lot of knowledge, a lot of education. Let's just take a moment of silence, please. Quick minute. Let's move on. NAACP 411. This branch in Fayette County was started because we saw some inequities in the school system down here in Fayette County. So a group of concerned African-American parents got together around 1996, and we were fortunate enough to start an organization that evolved into the Fayette County branch NAACP. A lot of you guys know your history of the NAACP, so make sure you support the NAACP, get a membership, and so forth. We have our membership chair over here, Ms. Evelyn, so make sure you go by that table and make sure that you get an annual registration or a life registration. I'm going to introduce a few people here. First of all, our guest, Ms. Terry Dennison from the SBA. She has lots of resources. You got to know this lady. You got to Google the SBA and see what all they have to offer. They have more to offer than just about, that's the greatest resource that you're going to have. And a lot of it is free, okay? Technical assistance for marketing, advertising, business structure, legal. They have all kinds of advice, and she's going to get into that a little bit later today. Show me the money. Ms. Victoria, PNC Bank. You need that's the biggest problem that we have, that a lot of startup businesses have, is capital, access to capital. So she's going to solve all those problems for you today. I've already introduced members of the Entrepreneurial Workshop Committee. Would you please stand? That is Ms. Davina. That's our chief right there, Mr. Kevin. He's put all this together with the help of the committee. This is a tax expert, Mr. Michael McBride. Have I left Mr. Davina's Miles and Miss Taylor, who has the same name as my granddaughter, and Miss Carolyn over here are all here to help us today. And we're going to go ahead and get this thing going. And my name is Malcolm Hughes. I need no introduction. I'm internationally known. Let's go, Mr. Mike. He is a microphone, Mike McBride. IRS agent. How many years, Mike? 44 years, okay? He can tell you how not to get audited.
Or what to do if you are audited. Good afternoon, everyone. So glad you came out to our session today. We're going to talk about financial management concepts. Second, and first we're going to talk about tax planning and reporting. Some of the things you would really like to know about taxes, you definitely should know about taxes before you start your business or if you're already in business, we're going to talk about some things that you can do to avoid some problems. We really want you to be successful because at the Fayette County NAACP, we think you should have the knowledge to be successful when you start your business. So before we get started, we've got a little bit of time here. Is it possible for us to just go around the room and just tell me what your name is and what your expectation for this class is? Name and expectation. Can we get a microphone maybe, Kevin? Or just over there, just pass it, just everybody, just pass it around. Just tell me your name and what your expectation for this session is.
Hi, I'm Lori Harris Interiors. I'm hoping to learn a lot about business taxes because I'm tired of paying every year. So, when we file our taxes, so that's what I'm hoping. And he and I just had a nice discussion.
Good afternoon, everyone. I'm Jennifer. J is preferred. And currently today, I am here to support my son, young entrepreneur, to get and gain all of the information that he needs. And with that, I'll benefit as well as an active community member and a parent leader.
Good afternoon. My name is Cheryl Foster, and I am here to get information on how to access capital for a startup business. I am not currently in business.
Hi, my name is Isaiah, and I'm here today because, I'm starting my business, so I want to learn everything I know before I go off into the real world.
Hi, my name is Evan, and I'm interested in looking in how to invest in small businesses, franchises, and see what the framework for that is and the opportunities available.
Hi, my name is Janie. I'd like to get out of the workshop today on advantages of being an entrepreneur and tax planning for my business.
Hi, y'all. I'm Lola Peterson. One of my expectations for this today is to just learn more about resources for financial resources, financial education, and just learn more about business taxes.
Hi, my name is Carol Martin, and I'm a real estate agent, and I also have an interior design business. And the area of opportunity for me is really centered around taking advantage of multimedia and social media services.
Hello, my name is Bridget Williams. I'm the founder of Kalima Montessori right here in Fayetteville. From this session, I would love to learn a little more about the differences tax-wise between an LLC and an S-Corp, and I'd also like to learn a little more about tax implications for nonprofits.
Hi, my name is Melissa McLeod, and this is my husband, Alex. We are actually new to the community. We're originally from Miami, so we did some multimedia businesses there. We're just trying to grow within the community, learn more, learn how everything works in the state of Georgia, and overall, network and learn to then possibly become a member of the NAACP today. Thank you.
Hello, my name is Constance Brown. I have recently started consulting, and I'm here to learn how I can turn this sort of moonlighting thing into a viable business.
Good afternoon, everyone. My name is Randy Hadeen. I'm a realtor for about a week now. I just got my LLC yesterday, so I need to know everything. So that's why I'm here. Thank you.
Yeah, good afternoon, everyone. I'm Wafia Lizul, and I'm here for supporting my daughter. She's interested in being an entrepreneur. She's a high schooler. Okay.
Can I say one thing? The mics that you guys are talking on right now are going over Facebook right now so that they can hear. So if you want to speak up a little bit for indoors, but also there's a good opportunity to go to the Fayette County NAACP's Facebook page right now and share it to your followers. The more eyeballs we have on it, the better off we'll be next year.
Hi, my name is Kenza Lazul, and I'm a high schooler, and I want to learn more about entrepreneurship.
Good afternoon. My name is Ashley Reed, and I'm the CEO and founder of I Am Ashley Reed, and I am here to learn about business taxes, capital, and everything overall.
Well, thank you so much. Thank you. Welcome again. This is our Fayette County first annual Entrepreneurial Workshop. We hope to have many, many more, and I'm sure we'll meet all of your objectives as we talk about tax planning and then financial management also. You see on the screen the PowerPoint is on most markers on the sides there and also up front, but the PowerPoint is just a guide. This is a great PowerPoint that was produced by the FDIC, Federal Deposit Insurance Corporation, in conjunction with the Small Business Administration, and it's a great PowerPoint, but I'm sure you don't want to go through just an hour and a half, 2 hours of desktop PowerPoint, right? So I'm going to interject that with some actual facts from my 44 years. So just to introduce myself, my name is Mike McBride. I'm a CPA. I'm the treasurer of the Fayette County NAACP. I was with the Internal Revenue Service for 44 years, believe it or not. Now, y'all were supposed to say, Mike, you don't look that old. Nobody said that. That's what you're supposed to say. But anyway, I had 42 years continuous service, but 44 years associated. And let's see, and I spent most of my time in the examination division. I was an internal revenue agent in the examination division of the IRS, so I audited all types of tax returns. And of course, I went to management and then worked my way up through various levels of management. I've been retired 10 years. I'm a member of the Georgia Society of CPAs and the American Institute of CPAs. And now I spend most of my time being treasurer of a lot of organizations like the NAACP, my fraternity, Alpha Phi Alpha fraternity, my church, and things like that. But also, my passion is I assist lower wealth or lower income individuals that get letters from the Internal Revenue Service and they don't know what to do with it. A lot of people, not just business, but everyone receives those letters, and I spend a lot of time helping individuals resolve those problems. So I think we'll accomplish all of your objectives.
Can you just grab the mic and just hold it up?
Just hold it up? Okay. Is that better? Okay. So let's see a show of hands. This is a show of hands. I have a few things I'm going to go through before I start the presentation. We start the PowerPoint. I promise you we'll do the PowerPoint. Just a few things. You remember the late night TV show host that had his top 10 list? You remember that? I believe then they go through the top 10. Well, I've got my top 10 or my top 15 or even my top 20 things that I want to make sure I convey to you before we get into the PowerPoint presentation. So, how many of you right now are W-2 wage earners? See a show of hands? W-2s? W-2s? Okay, we have some W-2s. All right. How many are 1099 NECs or 1099 MIS? There's a 1099 person there, 1099. Okay. Self-employed Schedule C. Don't be ashamed, raise your hand. Okay, we got some Schedule C self-employed. Okay. Any ministers in the audience? Okay, I won't do the minister comments then. I'll save that until we have some ministers. Ministers have special tax treatment, by the way, and I was going to go into that. Are we all familiar with itemized deduction Schedule A? Raise your hand. Okay. Some. That's great. We're familiar with the standard deduction. If you don't itemize the standard deduction, got that? Okay. Here's one that I'm going to talk a lot about, spend a lot of time, and I'm not going to move around a lot because we have the cameras. I usually just walk up and down the stage back and forth. But what about estimated tax? Anyone pay estimated tax here? Raise your hand. Don't be shy. No one pays estimated tax yet. Well, maybe you should. I'm going to spend a lot of time talking about estimated tax. So write that in your book if you would, estimated tax. So just a few bits and tidbits and all of that about being in business. Before we talk about tax planning and all of that, I just got some advice. The first piece of advice I have, and this is like my lawyers made me say it, okay? I have to say this, the small print when you see those commercials. Number one, if I had to give you some advice from my 42 years of being a CPA, my 44 years associated with the IRS, I would say taxes are hard, okay? They were hard for me when I went through revenue agent school back in 1976. They were real hard. I wasn't an A student, I was maybe a B student. The more taxes I did, the more progressively complex they got, the harder it was. So my first piece of advice, and this is just free information, find you a good CPA or a good bookkeeper. You can do it yourself if you know it, but if you're doing the front lot business of your business, the core of your business, the back lot business, which is posting the books, doing the accounts payable, paying the bills, it's going to take an enormous amount of your time. And if you have an active business and all that, just Splurge on the money. Find you a good CPA or find you a good bookkeeper. Everyone agree with that? My second piece of advice, I say this all the time since I'm a CPA, if you find you a great CPA, you can have a mediocre tax return. That was a joke also. you need both. Eventually, you're going to be successful. I know you're going to be successful, so you'll need both. Here's a real good piece of advice. You don't have to be a CPA in business. You know, you don't specialize in taxes, you don't specialize in bookkeeping, you don't specialize in adjusting journal entries and all of that stuff. But you need to know a little bit about taxes, you know a little bit about that, you know a lot about what you're going to do. So it wouldn't hurt to just go ahead, enroll in the local community college, enroll in an online class, and just take accounting 101, accounting 201, accounting 202, so you just know a little bit about it. Take personal income tax 101, corporate income tax 101, pay your fees and make your C's on that. You don't have to be a star student. Just go ahead and get familiar with it. So when you do meet with your CPA, you meet with your accountant, you will know what they're talking about. You won't be like the deer in the headlights because you have an obligation to yourself to not only know the front end of your business, to what you specialize in, but you have to know the back part also. So just spend a few bucks and go to a community college. You don't have to go to the University of Georgia. You don't have to go to that great school, Alabama, where Malcolm went to and all that. You can go to just a community college. Just take some of those accounting classes or tax classes. Here's a great one. We're going to get to the presentation, I promise you. Here's a great one. Just file your tax return. We didn't come to bury the tax law today. The tax laws here have been around since the early 1900s. File a tax return. If you have to file a Schedule C with your individual tax return, file it by April 15th. If you have a subchapter S or if you have a partnership, just file the returns. You really don't want to communicate with the Internal Revenue Service on why you didn't file a tax return. So my best advice is find a CPA, find a bookkeeper, find someone, buy some software, but file a tax return. Would you agree with that? The next one is even better. If you're in business, if you run a sole proprietorship, which is a Schedule C, or if you have a partnership, and I'll talk about the differences, or if you have a subchapter S corporation, then you more likely than not should file estimated taxes, quarterly estimated taxes. Everybody write that down. I'm going to harp on that because if we brought in the Commissioner of the Internal Revenue Service today, which I don't know in person, let me just say that, or if you brought in the Senior Deputy Commissioner, when I was there, I only met the gentleman 3 times in my 44 years. If you ask them what's the number one question that people have when they call, what's the number one item that they're discontent over the most when they hang up the phone, when they call the toll-free number, it's the failure to file estimated tax penalty. If you owe over $1,000 because your Schedule C sole proprietorship did really good, or if you have to include partnership income on your tax return, or subchapter S income on your tax return, there's no withholding on that. It's not withheld upon. W-2s are withheld. Then you probably will owe $1,000 or more, and if you owe that, there's a high probability you have to pay not only the additional tax, but the failure to file estimated tax penalty. So I've said it 3 times already. I'll say it about 10 times. Look at the quarterly estimated tax, file the estimated tax. I think that's one of the best pieces of advice I'm going to give you today, because tax withholding is only done on what form? Your W-2, generally. W-2 withholds your federal income tax, it withholds your Medicare tax and your Social Security tax. If you're self-employed, you pay that yourself. The only way to pay it is through estimated tax. Has anyone experienced that? You will, because you're going to be successful. Estimated tax. All right, Mike, that's enough on that. The next one, anyone have employees? You have employees, great. How many employees do you have? You have 2 employees, 2 employees. How many do you have, ma'am? 8, you have 8 employees. So you file quarterly employment tax returns, right? So when you have employees, you have to withhold the income tax on that. You have to withhold the Social Security tax, the Medicare tax. Those are called trust funds. The government trusts you to withhold those funds. Then they trust you to deposit that in the bank, depending on the size of what you withheld, daily, quarterly, or whatever. But they trust you to do that. And if you don't, let me just say, if you do not remit those funds, you may not go to prison, but you can see from the courtroom, okay? So my next piece of advice is If you withhold those funds, deposit those with the government. That's not money to spend to run the business. That's not money to make up for any shortages. Deposit your federal tax that are withheld and file your quarterly 941s. File your yearly 940. I'll talk about those forms also. Do not, absolutely, positively, do not use those trust funds. Do not use those withheld funds to run your business. And I know no one in this crowd would do that, right? But this is just free advice. File your employment tax returns. Let's see, my next one, and this is really great. I think I have one prop, just only one, because we're on kind of a limited budget. It's my box under here. I don't want to disturb I think we have one of the splitters on my box here, but I'm going to try to get it out. So, my last piece of advice before we get into the presentation, and this is free advice also. At the Fayette County NAACP, we have a limited budget. I couldn't go out to the prop department, and I couldn't get some really great props and all that. My only prop is, what is this? This is a shoebox. You're right, this is a shoebox. You see the big circle on there? It is a shoebox. What a shoebox is great for? Shoes. Shoeboxes are great for shoes. What a shoebox is not great for? All these books and records. Okay. Don't do it. Don't go to your CPA. Don't go to your accountant at the end of the year and say, okay, here's my shoebox full of records, file my tax return. That just won't work, okay? Don't do that. Shoeboxes are good for, wait a minute, I got my other prop. Shoeboxes are good for shoes. They are not good for books and records. Do not put all your receipts in there, and that you will never know how much money you made. You will never know what your profit is. Like on this one, here's a receipt for oil and gas for the company truck. It should be posted to the books and records. Here's one for a business lunch. Should have been posted to the books and records. So I'm going to talk about keeping good books and records, but the shoebox is a no-no. Don't do the shoebox. Will everybody agree with that? Put the shoebox away. We won't talk about that anymore. Put all these secret books and records away also. So I think that's all of my top 10, top 15. Were those helpful? File the tax return, pay your estimated tax, remit those employment taxes, look at estimated tax. Don't wait to be surprised at the end of the year when you file your tax return and say, oh gosh, I did better than I thought. I owe $4,000. Oh, you owe also estimated tax. Fail to pay estimated tax. Go ahead and pay that quarterly estimated tax. So now, the meat of the conversation. The agenda, we'll go through the presentation. I'll take 1 10-minute break during the middle of the presentation. Ground rules, you see this on the flip chart. There are no ground rules. No question is a bad question. No question is too complex. I may not be able to answer it, but I mean, it's not too complex, so no question is a bad question. If you have a question while I'm talking, just raise your hand, and we'll bring a microphone to you so everyone can hear it, and then I'll try to answer the question. There's a question right there already. Hold on for the microphone so everyone can hear it. Can we get a microphone back there?
Thank you so much. I had a question in regards to when you said find a CPA. How do you make a determination what's a good CPA and how do you find a good CPA?
Okay, so the question was how do you make a determination as to what a good CPA is and how do you find a CPA? Well, certainly I would say that if someone has passed that exam, and it's like a 4-part exam, when I took it, it was 3 days at the Macon Coliseum back in 1984, 83. But the best way to find a good CPA, really, to answer your question truthfully, is to look up the Georgia Society of CPAs. The Georgia Society of CPAs is a service organization. There are 13,000 CPAs in the state of Georgia, about 13,000. Virtually all of them are dues-paying members of the Georgia Society of CPAs. If you go to gscpa.org and look on there, you can either correspond with the membership department there, or you can call, and they will give you references and names to some CPAs in your area. That's a great question. Any other questions? By the way, questions are better than the PowerPoint. Hold on, just wait for the microphone there.
If you have an LLC, do you still have to file the withholding Or is that just for sole proprietor?
So the question was, if you have an LLC, do you still have to file withholding and pay taxes over, or is it just for regular tax?
I mean the estimate, you remember you said the
estimated
estimated?
tax?
Yes.
So, let's talk about LLCs. Hold that thought if you would, just for a second. LLCs is later on in the presentation, but really quickly, LLCs are organizations that are authorized and they're filed and they are formed with the authorization of the state. Okay, so your LLC you file with the state. You didn't file it with the IRS. You formed that with the state. The Internal Revenue Service of the federal government doesn't officially recognize LLCs as a business. So if you have an LLC and you're the only shareholder LLC, more likely than not, you will file that on your Schedule C tax return. Unless you file an election with the IRS to be treated as a subchapter S corporation or a partnership or something like that, or a C corporation, I know I'm calling a lot of names, more likely than not, 99.9% of the time, you will file that with your Schedule C, sole proprietorship. The IRS does not recognize LLCs. No, I haven't changed it yet. I'm still on questions and answers. But we'll talk about that more, but look at the LLC, seek some good advice, but most likely that's going to be on your Schedule C, sole proprietorship. So if that being the case, you do have to file estimated tax. If you anticipate making a profit in a year, if you anticipate paying income tax, and if you have a profit on your Schedule C, pay income tax, then you will also pay self-employment tax. Then the only way to pay that ahead of time before you file the tax return is by estimated tax. So, back ground rules, there are no ground rules. Any questions you have, I'll be happy to answer them. There's another question right there, Davina, right in the back. Can we get a microphone in the back, Malcolm? Yes, ma'am.
Hi, my next question is in regards to QuickBooks. As a tax professional, how do you feel about small businesses leveraging that as opposed to?
The question was, how do we feel about QuickBooks and small businesses leveraging that? There is and again, you're skipping ahead in the PowerPoint, but that's okay. These are great questions. There's a variety of bookkeeping software out there. QuickBooks is just one, a variety. All of them are great. Try one. There are some that are more powerful than others. Some do double entry bookkeeping. Some you just do the account, put the account in there, put a corresponding cash account, and they summarize it for you. My biggest advice on that is find the software. Pick one. It can be QuickBook, it can be Quicken, it can be some of the other ones. There's a multitude of them, but find a software to keep your books and records. Do not keep your books and records on what? The shoebox? We're not doing the shoebox. We're not doing receipts to the shoebox, so that's a great question also. All right, we've already done the introductions. So I spent a lot of time with the Internal Revenue Service, almost 44 years. I went to a lot of speaking classes with them. At one point in the latter part of my career, I was a spokesperson for one of the operating divisions there. I did a lot of speeches out of town and all that. They always made us do our objectives, right? Had to tell you what we're going to tell you. If you're in the Army says, tell them what you're going to tell them, and then tell them what you told them. So if you look on the screen, you see what the objectives are. At the end of this session, you're going to be able to identify federal, state, and local tax reporting requirements of a small business and the owner, and establish a plan to account and pay them. So you're going to know what the taxes are, and you're going to establish a plan to pay them by what? More likely than not, everybody in unison, estimated taxes. That is the number one complaint. The number one hard feelings when people call the Internal Revenue Service, I didn't know I had to pay estimated taxes, and I didn't know I had to pay this penalty. And then you'll identify methods of researching the local, municipal, and county reporting and licensing requirements also. We won't spend as much time on that because I want to talk about the federal income tax. Before we go on to what do you know, let me just back up a minute and say, as you go through life, as you go through various stages of your sole proprietorship, your LLC, your subchapter S, your partnership, whatever, as you file your tax returns and as your business gets larger, you're going to pay 3 types of taxes. You will pay federal income tax. There's just no doubt about it. Taxes are here to stay. You pay federal income tax. You will pay Social Security tax, and you will pay Medicare tax. So you may as well be ready. We might as well be ready for those. You pay Social Security tax. You pay the federal income tax in advance through withholding if you're a W-2, if you receive a W-2 from a company, or you pay it by estimated tax quarterly. You pay Social Security tax and Medicare tax through withholding if you work for a company, or you pay it by way of estimated tax if you are sole proprietorship or if you run your business. It's called FICA, Federal Insurance Contribution Act, if you're working, or it's called SECA, Self-Employment Contribution Act, if you're self-employed. So the SECA rate is around 17.3%. So whatever your net profit is, you can count on paying the income tax at whatever rate you are, plus 17.3% for self-employment tax by way of your estimated tax. But you have to pay that. There's no way about it. If you don't pay that, that means that you probably aren't doing something right if you don't pay self-employment tax to fund Medicare and Medicaid, Medicare and Social Security. If you don't pay income tax and you have a large net profit, as I said before, and I'm just kidding, but as I said before, I spent 28 years, you won't see prison, but you can see it from the courtroom as you tell the judge why you didn't pay it. Now, that's a joke, but I'm really serious about that. So you just pay that, and then there's some other taxes you pay also, but those are the main ones. Any questions on that? So let's look at what we know. If you look in your book, if you look in your textbook, there's a test in there just to see what you know. I believe it's on page 5. Kind of crowded up here with the computer. Did you find the little test in the booklet? It's on page 5. Thought I memorized. Let's take a second or two and just fill out those questions there. It's called a pre-test, by the way, the pre-test. Test your knowledge about tax planning and reporting. Just a few minutes and fill that out. There is no bad answer. Just circle the one that you think, and I'll be right back. So, all right, one of our suggestions for next year is that we have a larger speaker stand so the laptop won't overcrowd notes and all of that. So I'm going to do this from memory, so we may go a little bit over. I'm just kidding you, we won't go over. Everyone finished? So let's look at question number 1. What must a small business pay income tax on? We don't need a microphone for that. Anyone just tell me. A, gross income. Who said A? That was a good one, A. Any other guesses? B, net profit. Anything else? There is no bad answer. But the best answer is B, net profit. You pay income tax on your net profit. Number 2, what are the 2 basic accounting methods? Cash and accrual, right. Cash and accrual are the 2 basic accounting methods, and I would dare venture that if you're a starting entrepreneur, you're the cash basis taxpayer. You're always cash basis. You're the method you start out with when you file that first business return. That follows you throughout unless you ask the Commissioner of IRS to change accounting methods. So if you file that first Schedule C sole proprietorship on the cash basis, you're cash basis from then on. Which are the primary taxes businesses pay? Select all that apply. So let's just say all of those are applicable except one. What's the one business tax that what's the one thing down there that business do not pay? The luxury tax, right. Luxury tax deals with automobiles. If you're self-employed and have not incorporated, which tax form would you use when you file your taxes? Schedule C. Schedule C. And if you have an LLC and you're the sole proprietor and you haven't filed a form with the Commissioner of Internal Revenue Service asking to report it in some other form, your LLC also goes on the Schedule C. Your LLC is a Schedule C. Which form reports employees' annual wages and the amount of taxes withheld from their paychecks? W-2, right. You should all have your W-2s and file tax returns by now. That was great. That was great. So, you know more than we thought. You know more than thought. So, let's have a little conversation over the primary business taxes. If you look at the screen, the first is income tax. As we said, you pay income taxes on your net profit. So your net profit is your gross income minus your cost of goods sold minus all other expenses, all ordinary and necessary expenses. And the Internal Revenue Code defines what ordinary and necessary expenses are, but it's any expense that you need to file your tax, to run your business. If you really would like to fact check this, the Internal Revenue Code is Title 26 of the U.S. Code, Title 26. So if you Google Title 26 of the U.S. Code, that would be the Internal Revenue Code. And I'm just going to show off stuff I learned 40 years ago. If you looked at Section 162 of the code, it gives you the parameters for what ordinary and necessary business expenses are. So you pay income tax based upon your net profit. And if you have a sole proprietorship, how do you pay those taxes? You can pay it all at the end of the year and have it all bunch up and have to pay it, or you pay it through everybody in unison, estimated tax. So any questions on income tax? As you go through life, everyone pays. They don't pay the same amount. It's a graduated tax system. Malcolm?
Can I write off my cell phone and my car expenses to come down to my net income?
I didn't hear the last part.
And my automobile expenses to come down to my net income that's going to be taxable.
Okay, the question was, can you write off his cell phone and his car expenses to decrease his net income? Absolutely, positively, yes. If you use it in your trade or business, then you can write it off. The cell phone, there's an exclusive use test. You have to use it exclusively to write off 100%. But if you just have one cell phone and you use it for personal and business, then you have to figure out what the business percentage is. You can only deduct the business percentage of anything. So if the cell phone is $1,000 a year, you use it for personal all that, write off 50% of the charge of the cell phone. You can. Anything that's used for ordinary and necessary to run your business, you can write it off. So in that regard, when we talk about cars, you can write off the cost of your car that you use in your business. Only the business portion of that car, not the personal portion. So if you have two cars, like I was blessed to have two cars, when I was running the CPA business before I retired for good, then of course I wrote off a portion of that car because I use the other car for personal use. So yes, you can. That's a great question, Malcolm. There are two methods for writing off your car. You may want to write this down also. You can do the applicable percentage. Let's just say use 100%. 100% of all the gas, oil, repairs, insurance, all of that stuff. And the depreciation on the car. Depreciation is a deduction for the annual wear and tear, so you can write off all of that. Or you can use what's called the simplified method. You can keep up with your business miles, multiply those miles times a set number, and that's your deduction. I think the number is like 75 cents. Does that sound right, Malcolm? Something like 75 cents per mile, and that includes gas, oil, repairs, insurance, depreciation, and all that. So two methods for writing off business expenses. Yes, you can write them all off. Yes, ma'am. So So the question was, if you use your car exclusively for business, 100%, which means you have a second car to use for personal and all of that, you still have to document it, and there are a lot of apps that help you put in where you go every day, and they'll accumulate it and tell you what the mileage was and all of that, where you went. You can use those apps to document it, but then you can write off everything associated with keeping that car up. Gas, oil, repairs, car insurance, everything in the business for sure. But you have a responsibility to keep up with or maintain records that fully document that 100% business use. The responsibility is not with the Internal Revenue Service to establish your personal use and subtract it out. The responsibility is for you to document your business use of that car and have the records for that. But then if you go through that documentation process, you can write off everything with that car. You have to split it. You have to split. If you use it for personal, if it's 60-40, 60% business and 40% is not. Take all the expenses, 60%, you put it in a tax return, 40%, don't put it in the shoebox, but you don't use it. That's correct. Great questions, great questions. The question was, if you pay your quarterly estimated tax payments, and those are paid on Form 1040 ES, so if you go to irs.gov, or any major software, any software will prepare this for you also. Any software will do it, and compute your quarterly estimated tax payments and make those 4 quarterly payments, and you still owe a large amount. Let's just say business was just great in the fourth quarter, you didn't pay enough in, there's a possibility you still will. There are like 3 exceptions as to why you will not owe it. 3 exceptions, so if you go through and read those exceptions, you may not, but there's a good possibility you will. If you owe over $1,000, there's a great possibility you will. It's a little bit. You don't want Uncle Sam to have $7,000 to $8,000 of your money all year long. It's called an estimate, so you want to hit it as closely as possible. But yeah, error on the side of paying more than not paying enough. The general rule is 30% of what? No, the question was, the general rule is that 30% of your income to pay for estimated taxes. No. The general rule is to look at what you anticipate your net income being, compute the tax on that, and then look at what the self-employment tax would be on that, add the 2 together, and divide them by 4, and you can pay 100% of that, you can pay 100% of that, or you can pay 90% of it, and you'll be pretty close. But it's the tax that you're doing the computation on, not the net income. The net income, compute the tax, compute the self-employment tax, add both of them together, divide it by 4, and that's what you would pay in 4 quarters.
Okay.
And if you do it in 2 quarters, because you could have the first 2 quarters were kind of slow, the next 2 quarters were great. As long as you have it paid in by that last payment, you'll be pretty safe.
Okay.
I'm so happy that y'all are heeding the advice on estimated tax. Any other questions? So next on my list is self-employment taxes. And I think I mentioned that. Self-employment taxes, if you have a sole proprietorship Schedule C, you will pay that 17.3% self-employment tax on your net income. All the software does it for you. You can do it by hand if you like, but the software will take care of it for you. You will pay that. So that's part of the estimated tax payment. But that's used to fund Social Security and Medicare. Trust me, as you get older, you want Medicare coverage. You really, really do. Any questions on that? You cannot opt out of Social Security. You cannot opt out of Medicare. Ministers are the only ones that I'm knowledgeable about that can opt out of Medicare. Ministers. And they have to opt out within like the first 2 years of being ordained, or they can't opt out. So, but no, it's not a personal preference, it's mandatory. Yes, ma'am.
On behalf of the teens or newly into taxes, 16-year-olds that are coming in with, side jobs, side hustles. We have, all the third-party payments like Cash App, Zelle, Venmo, etc. News has been going around about after a certain amount you get paid per month through that, it will be automatically reported to the IRS. Do you have any advice for 16-year-olds who may be in a sole proprietorship, let's say lawn care, delivery services that they are doing on their own? How will they prepare for making sure that they don't get into bad habits or get themselves into trouble using those type of apps who are reporting?
So the best advice I can give is, again, through estimated tax. We'll talk about preparing a budget later on in financial record keeping and financial reporting, where you prepare a budget, estimate what your income will be, estimate what your expenses will be, and then you'll know what to pay in estimated tax. But if you everyone uses Venmo, everyone uses Cash App, but the payer, the person that paid you that amount for the services, if it's a then they have to give you a 1099 NEC. If it's just back and forth between you and your friends and all that, you have the obligation through your bookkeeping to keep up with all of that. So good bookkeeping, good record keeping, not using the shoebox, but using a proprietary software that you pay for, that would be the best way to do that. Establish a budget, keep up with everything, all your expenses, do great bookkeeping with software, and you'll know. So the undercurrent theme is, and we're getting into the next lesson, is mainly you absolutely, positively, without a doubt, I'm 99.9% sure, you have to keep really, really good books and records. You should know how to do that, or you should hire somebody. You should find an accountant, fire a bookkeeper, find a CPA to do the bookkeeping for you while you concentrate on the business, but then you do have an obligation to know what goes into the books and records and know what all that is. Start early rather than later.
I have one more question, sir.
Another question? No question's a bad question.
Thank you. In regards to passive income versus active income, I know the tax rates can be different. With the estimated taxes that you said we should pay quarterly, do you pay both of those as well for your active versus your passive income?
You do. Everything, go through and compute your income tax like you would do a regular tax return. Compute the income tax, compute the self-employment tax, add those together, divide them by 4, and that's your quarterly estimated tax payments. Employment taxes, I've mentioned employment taxes. If you have employees and you withhold the amount, you must remit that, you must deposit that by way of federal tax deposits. You must do that. It's not voluntary. If you withhold it from the employees, that's their money for their federal income tax liability. That's their money for their Social Security coverage and their Medicare coverage. If you do not do that, I spent maybe 5 years auditing people that didn't do that. Those are not pleasant conversations. Don't do that. Do that. Deposit that money every quarter. File that Form 941, and then file that Form 940 for the federal unemployment tax also. Any questions on that? I think I beat that to death because I know everybody in this group will do that, right? You're going to remit those funds. Tax identification number. How many people have a tax identification number? They're called TINs, T-I-N, tax identification number. Well, is your tax identification number your Social Security number or your employer identification number? Which one is it? EIN, right. So, generally, if you're a sole proprietorship and you have no employees and it's just you by yourself, then your taxpayer identification number is your Social Security number. It is. But if you withhold, and you have employees, and you withhold federal income tax, and you withhold Medicare tax, and Social Security tax, which you will, then you will need an employer identification number, or EIN. So it's either your Social Security number, just you by yourself, or it's your employer identification number. Yes, ma'am. Question over here on the...
You don't need a tax ID number?
You have to have a tax ID number, but if you're the only person in your sole proprietorship, your tax identification number is your Social Security number. If it's just you, if you're the only employee. Now, you can, and some people do this. I know people that pay themselves a salary. They have sole proprietorship, but they pay themselves a salary, withhold the taxes and all that stuff, deposit and all that, and issue themselves a W-2. And then if they have a net profit at the end of the year, then they also pay self-employment tax. You can do that, but if you do that, then you have to have an employer identification number. But if you're just going straight from your net profit on your Schedule C, computing your income tax, and then computing your Social Security tax, your self-employment tax, then your taxpayer identification number is your Social Security number. Yes, ma'am. Hold on. There's a mic coming to you so everyone can hear.
Oh, thank you. If you have an LLC and you're the only person, I have an LLC, it's just me, and I have a tax ID number, EIN number, do I need to have that?
You can use it. It won't hurt. It won't hurt. Use it. So let's talk about LLCs. Everyone wants to be an LLC, right? It's just so sexy to be an LLC. There are some business segments where you need to be an LLC because society likes to litigate and there are some statutory requirements. But my best advice that I give everyone, if you're just starting out, like the gentleman here, Isaiah, right? Like Isaiah, for what you're doing, you really don't need to be an LLC. You can be a sole proprietorship. When you start, why give the Secretary of State, and I'm not bad-mouthing the Secretary of State, why give them that much administration and all of that when you have a sole proprietorship? You're not going to make all that much money and all of that. When you get to be really big, when you start having gross receipts over $1 million or $2 million, then you can form an LLC. But just start out, conserve your money and just be a Schedule C. That's my advice. But, you could have an EIN, but if you have an LLC, I'll say once more, the federal government does not recognize LLCs as a separate entity. The federal government recognizes schedules. They recognize 1120, Forms 1120 corporations, recognize Form 1120S, Subchapter S corporations,